What's going on, guys? Welcome back to the channel. Welcome back to another video. If you guys are stopping by the channel for the first time, go ahead and do me a favor, drop a like for the video and subscribe to the channel. Well, guys, a lot of you guys have asked for different ways of creating passive income in 2023. But what I want to share with you guys today is the fact that you can generate passive income fairly simply, regardless of what year it is, and regardless of whether or not you're in a recession or inflation is high or whatever the Fed's doing. And what I want to share with you guys is something that millionaires are doing right now. And they've been doing this for a long time. See, millionaires and successful investors have looked at long-term trends, and they have placed strategic investments, capital, in line with what has happened in the past to make sure that they get paid. Now, of course, with investments, there's no guarantee of any type of future return. But what we like to do is we like to look at the history of investments in the stock market, the S&P 500, in the housing market, in real estate, commercial real estate. Well, I'm staying away from commercial real estate right now. But there are certain trends that have held up for a very long period of time. And in today's video, I want to share with you guys a couple of stocks, dividend stocks. In fact, these are dividend paying stocks that have been paying out dividends on a regular basis and increasing how much they're paying shareholders for a long time. Like, these are what we call dividend aristocrats. And these particular stocks have paid out for the last 25 years in a row or longer. But the minimum length of time to become a dividend aristocrat is that these stocks, these companies had to be paying dividends out to shareholders for at least 25 years. So 25 years is the minimum to become a dividend aristocrat. So these are clearly very stable companies, because if a company is able to pay out a dividend, then that proves that they have a very strong cash flow. And so it's, even in spite of recessions, we can look at the history. How many recessions have we had the last 25 years? I would have to probably say a good 3 or 4. So in spite of these historic recessions, they've still been paying out dividends and still increasing the dividend being paid out. So that is one great way of generating passive income, by just having stocks that pay you on a regular basis. And this is one way that I generate a paycheck through income paid to me through dividend stocks on a regular basis. So if you're looking for reliable dividend stocks, then you've probably heard of dividend aristocrats. And these are basically top quality dividend payers. And I think that these are staples to anyone's portfolio who's looking to generate fairly reliable income. So whether you're investing in dividend aristocrats, whether that's right for you, depending upon what your tax strategy is, you'll have to figure that out for yourself. But what I like to do is I like to understand what are the different income methods that I can use, create, and leverage to create passive income, so that I don't have to spend my entire life, clocking in. I don't want my income dependent on me working. It's kind of like trying to evolve my income away from trading my time for dollars, or trading hours for dollars, as they say. So anyway, important strategy. So you might be thinking to yourself, like, what exactly is a dividend aristocrat, right? Well, basically, these dividend aristocrats, number one, they're members of the S&P 500 Dividend Aristocrat Index, right? And so this particular index, it's got two primary requirements, and we talked about these before. Number one, these aristocrats, they have to have increased their annual dividend payments in each of the last 25 years. So we've covered that. The other thing is that an aristocrat must be an S&P 500 company, meaning that it's not some small company. These are one of the largest companies in the United States, period and point blank. And they're basing this off of market capitalization. And so together, these two qualifications are clear indicators of the stock's quality and the reliability of the stock's index, or the stock's dividend. So investors, they use the word quality to describe good stocks. But what does this mean exactly? Like, that's kind of a vague explanation, right? So generally meaning, a quality stock has some kind of level of predictability. It's a company that has been able to deliver slow and steady growth with volatility that is the same or the less of the overall market. So basically, this is what is defined as a good quality company. And there's a couple of different ways to identify quality in a stock. Now, you might look at how the company's debt service requirements are relative to its cash flow. And you probably also want to know what the company's competitive advantage is and how it drives ongoing demand for its products and for its services. And you'd also need to understand the company's history, including, how it's performed in previous recessions and bear markets. Very important. So I'm gonna share with you guys just a couple of the highest yielding dividend aristocrats available. Just a couple. I'm not gonna give you guys a whole list, just to kind of get you guys started, get you looking in the right direction. Do your own research, of course. None of this is considered financial advice, but I think that we would be amiss if we did not talk about 3M. So 3M, ticker symbol MMM, again, S&P 500 stock, quality stock. It's a good stock, right? And the forward dividend yield on this guy is 5.7%. Now, this is a very good yield. In fact, you're not going to find this yield leaving your money in a savings bank account. You're not going to find this yield leaving your money sitting in a 0% interest checking account, which a lot of Americans are doing. And this is not what the wealthy are doing. Now, the wealthy will use cash. They will sit in some cash. But the amount of cash that they're willing to sit onto or hang on to or leave in a cash equivalent asset is relative to their total net worth. So above and beyond, a certain amount allocated for daily expenses, emergency fund, yada, yada, they're going to put their money to work. Another dividend aristocrat that I want to share with you guys is called Leggett and Platt. This is Leggett and Platt, ticker symbol LEG. Now, if you guys don't mind, I'm gonna go ahead and hop on this boat right quick. Let's see if I can make it on here. Little bit of a gap between the dock and the boat.
Go this way, it's a little easier.
Yeah.
How dare you? I think Kevin brought a garbage bag somewhere. The Karens wear visors.
to spend your time the way you want to. So drop me some comments, guys. Be sure to drop a like for the video. Also subscribe to the channel and let me know what you guys want me to cover next in the next video. Appreciate you guys hanging out with me as always, and I'll catch you guys on the next one. Y'all be safe.